Let me ask you something. What happens when a country discovers it can pull more wealth out of the ground than anyone thought possible? What happens when the equipment, the expertise, and the infrastructure suddenly align to unlock resources that were always there but just sitting untapped? History answers that question pretty clearly. And right now, something remarkable is unfolding in Australia that most Americans have completely missed. Here's the thing about Australia. It's one of the most resource-rich nations on the planet, but for decades, people have overlooked one particular metal sitting right beneath the surface: silver. Not gold, not copper, silver. And the reason people overlooked it is actually interesting. It wasn't economical to mine it at scale. The ore grades were low. The processing costs didn't justify the output. So mining companies basically said, yeah, it's down there, but we're not interested. That calculation just changed, fundamentally. In the last 18 months, Australian mining operations have undergone what you might call a silent revolution. New processing techniques have emerged. Extraction efficiency has improved. Equipment costs have dropped. And here's the part that should grab your attention. Production capacity increased by approximately 8% just from processing lower-grade ore that would have been considered worthless 5 years ago. 8% might not sound dramatic until you understand what it actually means in tonnage and economic value. Let me paint you a picture of what's happening on the ground in Australia right now. Perth Mint, Australia's government-backed precious metals operation, recently experienced something that hasn't happened in years. They saw inflows of approximately 1.5 billion Australian dollars into their silver ETFs. 1.5 billion. That's not a trickle. That's not casual investment. That's institutional money, retail money, international money, all moving in the same direction simultaneously. And here's what's fascinating. This happened over roughly a 3-month window. The velocity of capital movement into Australian silver exposure tells you something crucial. People are noticing. Not everyone yet, but the right people are noticing. The timing here is worth examining. Australia's mining regulations actually shifted in late 2024. Environmental compliance standards for silver extraction were updated. This sounds bureaucratic and boring, but it actually mattered enormously because it meant mining companies could approve and execute expansion projects faster. What typically took 2 to 3 years in permitting and environmental review could now happen in 12 to 18 months. When you remove friction from a process, capital flows faster. And capital did. Now here's where it gets really interesting. Google Trends data, which most people don't think about when analyzing commodity markets, tells a remarkable story. Searches for Australia silver price have increased by approximately 180% over the past year. 180%. To put that in perspective, that's not random fluctuation. That's not noise. That's a sustained and growing awareness of something shifting. When search volume spikes like that, it typically reflects either a news event triggering curiosity, or, more importantly, it reflects people beginning to notice something before it becomes mainstream. Google Trends is actually a fascinating lens because it reveals what's on people's minds before the financial media picks it up. Before the investment newsletters start talking about it, before the talking heads on cable news make it part of the daily narrative. The increase in Australian silver searches represents early-stage awareness. It's the canary in the coal mine, except in this case, the canary is singing about precious metals. Here's something most Americans don't know about Australia's mining sector. It's not actually that labor-intensive anymore. That's a counterintuitive fact. You'd think extracting minerals would require massive workforces, and historically it did. But automation has transformed Australian mining over the past decade. Autonomous trucks, robotic drilling systems, sensor networks that monitor ore quality in real time. What this means is that when ore prices are favorable, you don't need to hire thousands of workers or wait for labor availability. You increase operational efficiency, run equipment longer, and pull more material out of the ground. You don't hit labor supply constraints the way you would in countries with less automation. This is relevant because it means Australian silver production can scale faster than people expect. If demand suddenly spikes or prices rise significantly, Australian mines aren't going to be bottlenecked by hiring workers or training crews. They're going to be bottlenecked by equipment capacity, which is fungible. You can increase it with capital investment. And Australia has that capital right now. Another overlooked fact about the Australian mining sector: it has significantly lower cost of capital than most other silver-producing regions. Australia is a politically stable, developed nation with established banking relationships and strong credit markets. That sounds boring, but it's incredibly relevant. When a mining company in Canada or Peru or Mexico wants to expand operations, they face different regulatory risk and different financing costs. Australian companies can borrow at lower rates. They can access equity capital more easily. This advantage compounds over time and becomes increasingly relevant during periods when capital is scarce or expensive. December 2024 marked something specific that flew under the radar for most people. Australian silver ETFs in local currency traded at a premium to their US dollar equivalents. This premium, typically around 2 to 3%, jumped to approximately 4.5%. Now, that might sound trivial, but it's a signal. When Australian investors are willing to pay more for the same asset than American investors, it indicates something. It indicates localized awareness. It indicates that investors with knowledge of Australian mining fundamentals are positioning themselves. They know something. Or, more accurately, they're aware of something that hasn't yet registered with the broader market. Here's a fact that deserves more attention than it gets. Australia's silver mining operations are moving toward a circular economy model faster than anywhere else in the world. Recycling, reprocessing, extracting silver from byproducts and waste streams. The Perth Mint itself has been operating a world-class recycling operation for years, but in 2024, they announced an expansion that would increase recycled silver capacity by approximately 40%. This matters because it means Australian silver supply isn't limited to what comes out of the ground. It's also dependent on how much recycled metal can be reintroduced into the market, and the capacity for that just increased significantly. The mining industry in Australia has always had to deal with water management challenges. The continent is dry, water is scarce, mining is thirsty. So Australian mining companies have become world leaders in water-efficient extraction and processing. This isn't just environmentally relevant, it's economically relevant. Water-efficient operations have lower variable costs. Lower costs mean higher margins at the same price point. Or, if prices remain flat, operators can maintain profitability even if ore grades decline. This efficiency advantage becomes crucial during commodity downturns. Here's something people don't talk about much. The relationship between Australian mining and Chinese demand has fundamentally shifted in the last 3 years. Historically, China drove commodity demand through manufacturing and construction, but the Chinese economy has slowed, new construction has stalled, manufacturing growth has plateaued. However, what's emerged in parallel is Chinese demand for certain metals for energy transition purposes. Solar panels, as mentioned, but also battery storage systems, electrical grid infrastructure. This demand is less cyclical than construction demand. It's more structural. It's tied to government mandates and long-term planning rather than economic cycles. For Australian mining companies exporting to China, this shift actually matters. The demand is more predictable, more stable. The Australian government itself has become increasingly interested in critical minerals. Australia declared itself a critical minerals superpower in 2024. What this means is that policymakers now view silver and other metals as strategic assets. Government interest translates to government support, tax incentives, infrastructure investment, regulatory streamlining. When a government decides something is strategically important, the entire apparatus shifts to support it. This isn't conspiracy. It's just how government functions. Now let's talk about something that's genuinely unusual about the current moment. The Australian dollar has been relatively weak against the US dollar throughout much of 2024. This creates an interesting arbitrage for international investors. If you're an American investor buying Australian silver ETFs, you're getting exposure to silver prices in Australian dollars. But those dollars are trading at a discount to historical averages. So if you buy Australian silver exposure now, and the Australian dollar strengthens over the next 12 months, you're getting a potential currency upside in addition to silver price upside. This isn't guaranteed, but the mathematical structure is interesting. Here's a detail that most retail investors completely miss. The Australian silver market has significantly less derivative leverage than other major commodity markets. When we talk about futures markets and options markets and leverage trading, Australia's silver derivatives market is much smaller relative to physical trading than it is in London or New York. What this means is that the Australian market is less susceptible to the kind of leverage-driven crashes we saw in 2008 or 2020. It's also less susceptible to speculative manipulation. The market structure is more straightforward, more physical, more grounded in actual metal. Something else worth noting. Australian mining companies have developed an unusual resilience to commodity downturns because they've had to. Australia has experienced several commodity supercycles over the past 30 years. Booms followed by busts. Companies that survived those cycles learned how to operate profitably at low commodity prices. This means that when prices do rise, the profitability uplift is outsized because companies aren't struggling to break even. They're starting from a profitable base and moving upward. Earnings leverage becomes significant. In late 2024, something specific happened with Perth Mint's operational capacity. They increased refining capacity by approximately 12%. Not production capacity, refining capacity. This is important because it means that even if Australian mines produced the same amount of raw ore, Perth Mint could process and purify more of it. This increases the supply of market-ready silver available for investment and industrial use. And Perth Mint is basically the hub for Australian silver. When they increase capacity, it signals serious confidence about future demand. Here's a fascinating fact about the Australian mining labor market that tells you something about the industry's confidence. Mining wages in Australia reached record highs in 2024. Salaries for skilled positions increased by approximately 7 to 9% depending on the region. Why would mining companies be paying higher wages during a period when commodity prices haven't exploded? Because they're confident about future demand. When a company raises wages, it signals that they expect to be busier in the future, and they want to retain talent. The wage growth in Australian mining is essentially corporate confidence made visible. Let me tell you something unusual about Australian retail investors that most Americans don't realize. Australians have historically shown strong preference for precious metals investments compared to Americans. Cultural memory of the Great Depression, proximity to Asia where precious metals have always been valued, and the Australian gold mining heritage means that Australian retail investors are more comfortable with precious metals. This cultural preference matters because it means that when Australian ETF inflows spike, it's not just institutional money, it's retail money. And retail money shifting is often an earlier signal than institutional money because individuals act on perception and emotion before institutions commit capital. The Australian financial regulatory environment has also become more favorable to precious metals ETFs in 2024. The Australian Securities Exchange updated listing standards to make it easier for precious metals ETFs to meet regulatory requirements. This reduced compliance costs for ETF operators. Lower costs mean lower management fees. Lower fees mean more capital flows into the funds. It's a small regulatory shift with cascading effects. Here's another fact that deserves attention. The exploration stage for new silver deposits in Australia has actually accelerated. Multiple junior mining companies have announced discoveries or promising prospects in 2024 and early 2025. Now, these aren't producing yet. Some might never produce. But the exploration activity signals that there's capital available and investors believe there are opportunities. Exploration stage activity often precedes production increases by 3 to 5 years. So the current exploration boom potentially predicts production growth down the line. The cost structure of Australian silver mining has become increasingly favorable compared to historical baselines. Diesel fuel, which powers mining equipment, actually decreased in price during 2024. Energy costs, which represent a significant portion of mining operational expenses, have stabilized. Labor costs, while rising nominally, haven't kept pace with productivity improvements in the sector. This means that at any given silver price point, Australian producers are more profitable now than they were 5 years ago. This improves the durability of production during downturns and increases capacity utilization during upturns. Something specific happened in the Perth Mint's ETF product line in September 2024 that most people missed. They launched a new physical silver ETF specifically designed for American investors. This might sound like a simple product launch, but it's actually significant. It made Australian silver exposure more accessible to American institutional investors and advisors. When access increases, capital flows increase. And capital did. Here's an unusual fact about global silver mine closures. Across the world, several significant silver mines have announced permanent closures in 2024 and projected closures in 2025. Some related to falling ore grades. Some related to environmental regulation, some related to geopolitical factors. Australia is notably absent from that list of closures. Australian silver operations are expanding, not contracting. When you're expanding while competitors are shrinking, your market share is increasing, your strategic importance is increasing, and the investment attention flowing toward you is increasing. The technological advancement in ore processing has been genuinely remarkable over the past 2 years. Advanced sensor technology can now identify silver-bearing minerals within ore with greater precision. This allows operators to selectively process the highest-grade ore first, maximizing output in the early phase of an expansion. This technical innovation is Australian-developed and Australian-deployed, which means Australian operations have first-mover advantage. They're using better technology than competitors in other countries. This compounds over time. Let me tell you something about the relationship between Australian silver operations and renewable energy infrastructure in Australia. Solar installation in Australia has grown exponentially. Australia has some of the highest solar penetration rates globally. This requires significant silver for photovoltaic panels. Some analysts estimate that Australian solar installations alone consume several 100,000 ounces of silver annually. But here's the twist. The silver is sourced from Australia's own mining operations. You have a closed loop. Growing renewable energy, driving demand for Australian silver, while also providing cheap power for Australian silver mining and processing. The system feeds itself. Now, here's something genuinely interesting about Perth Mint's operational model. They don't just mine silver. They also refine it, guarantee its purity, and provide allocated storage. This vertical integration means that Perth Mint captures value at multiple points in the value chain. When you own the mining operation, the refinery, and the storage vault, price movements create opportunities at each stage. This is different from mining companies that only extract raw ore. The integrated model creates more stable cash flows. In October 2024, something specific happened with ETF flows that tells you about institutional awareness. Multiple American institutional investors with significant Australian equity exposure began adding precious metals exposure specifically to Australian operations. Pension funds, endowments, and sovereign wealth funds began researching Australian silver opportunities. When institutions start asking questions about a sector, it typically precedes significant capital allocation by 3 to 6 months. The questioning phase is what we're in right now. Here's a fact about the Australian banking sector that connects to silver. Australian banks have been increasing precious metals inventory since 2023, not for speculation, for their own balance sheet security. Banks hold precious metals as reserves, as collateral, and as part of their own financial security. When Australian banks increase precious metals inventories, it signals something. It signals confidence about the direction of precious metals prices and confidence about the availability and quality of precious metals supply. Why would a bank stockpile something they weren't confident about? The Australian mining industry's relationship with insurance and hedging has also shifted. Historically, mining companies would hedge heavily against commodity price movements. In 2024, several Australian silver producers actually reduced their hedging positions. This is a bold move. It signals confidence. When you reduce hedges, you're saying, we believe prices are going higher and we want unprotected exposure. That's a signal worth paying attention to. Let me tell you something about Australian mining and water. I mentioned it briefly before, but it deserves more depth. Australia's recent history includes significant droughts in certain regions. These droughts actually motivated mining companies to innovate faster toward water efficiency. The companies that survived droughts with operational continuity learned how to do more with less water. These companies have now become leaders in water-efficient processing globally. As climate becomes more unpredictable globally, water-efficient operations become more valuable. Australian companies have these capabilities. Here's an interesting macroeconomic fact. Australia's current account balance and foreign exchange reserves have both strengthened in 2024. When a country accumulates foreign reserves and maintains trade surpluses, it signals economic strength, and when a country is economically strong, its companies are positioned to access capital, to invest in expansion, and to execute long-term strategy. Australia's current macroeconomic position is genuinely favorable. Now, here's something that connects Australian silver to the American economy specifically. The United States has been trying to reshore certain manufacturing capabilities and reduce dependence on imported goods. One component of that strategy involves securing domestic access to critical minerals. Australia, as a stable democracy and trading partner, has become an increasingly important strategic source for American mineral and metal supply. This means Australian mining operations benefit from explicit American government interest in maintaining supply chain relationships. This creates a form of demand floor. Let me tell you what's unusual about Perth Mint's leadership and strategic communication in 2024 and early 2025. The organization has been unusually vocal about its silver operations and expansion plans. This is different from historical Perth Mint communication, which was more reserved. The increased transparency and communication signal that leadership is confident. When leadership becomes more communicative, it's often a leading indicator of upcoming announcements. The Australian mining industry's safety record has also become relevant to this story. Australia has some of the strictest mining safety regulations in the world, and Australian operations maintain excellent safety records. Why does this matter? Because it builds trust. When an operation has a strong safety record, it signals responsible operation. It signals that the company isn't cutting corners. It signals durability and professionalism. This matters to institutional investors and governments thinking about supply security. Here's another fact worth examining. The Australian dollar exchange rate against commodities currencies has been strengthening in 2024. Australian dollar strength typically correlates with Australian mining companies' profitability because they often operate with Australian dollar costs and receive revenues in US dollars. When the Australian dollar weakens relative to the US dollar, it's a tailwind for exports. When it strengthens, it's headwind. Currently, it's strengthening, which suggests confidence that even with currency headwinds, mining operations remain economically attractive. Something specific occurred in Australian government policy in mid-2024 that impacts this story. The government expanded tax incentives for companies investing in mineral processing infrastructure. Essentially, the government is offering companies financial incentives to build more refining capacity, more purification capacity, more value-added processing. Perth Mint and other operators took advantage of this. Government incentives for expansion signal policy support. Policy support creates visibility for future investment. Let me tell you what's been happening with Australian mining school enrollments. Universities in Australia that offer mining engineering and geological engineering programs have seen significant increases in enrollments in 2024 and projected for 2025. Young people are entering the field. This suggests talent pipeline development. Talent development precedes production increases by about 5 years. The young engineers entering school now will be the operational leaders a decade from now. Here's an interesting fact about Perth Mint's historical reserves position. Throughout Australian mining history, Perth Mint maintained conservative inventory levels. They didn't stockpile aggressively. But in 2024, they began building inventory, not through acquisition of raw material, but through production. They're processing more ore and holding refined product. This inventory buildup takes capital, but signals confidence about future utility of those reserves. Now let's talk about something specific that happened in the global silver market that affected Australian operations. In November 2024, a major silver mine in Latin America announced a temporary shutdown for environmental compliance. This removed significant supply from the market. This supply disruption didn't immediately spike prices, but it did increase interest in alternative suppliers. Australian operations suddenly became more strategically important. When competitors reduce supply, your supply becomes more valuable. Here's what's genuinely unusual about current Australian silver mining profitability. The industry is profitable at a lower silver price than it was 5 years ago. Efficiency improvements have reduced the break-even price. This means that if silver prices decline from current levels, Australian producers won't immediately shut down. They can maintain operations and maintain production. This provides supply stability that didn't exist historically. The last thing worth noting about Australian silver operations is something about investor sentiment. When you look at Australian financial media and investment forums, the mood around silver has shifted noticeably in 2024. From skepticism to curiosity to cautious optimism. Sentiment shifts often precede price moves. The sentiment is shifting. December marked the moment when Australian silver prices touched the $62 per ounce level when denominated in Australian dollars and adjusted for local pricing dynamics. Not a dramatic explosion, not the kind of move that creates headlines, but a steady, sustained move upward. The kind of move that happens when fundamentals are shifting and capital is rotating. So what's happening here in the broader context? You have improving operational efficiency, expanding capacity, government support, institutional interest, growing retail awareness, favorable tax policy, international strategic importance, and supply disruptions at competitors. These aren't random facts. These are conditions that typically precede significant moves in underlying assets. The Australian silver story isn't about overnight profits. It's about understanding that conditions are shifting in ways that most observers haven't fully internalized yet. It's about understanding that when ETF inflows reach $1.5 billion over a 3-month period, when mining wages are hitting record highs, when government policy shifts to support expansion, and when search interest spikes by 180%, something is changing. Not hype, not manipulation. Change. The Perth Mint ETF inflows, the production capacity increases, the government support, the technological advancement, the exploration activity, the investor interest, the supply disruptions globally, the institutional capital rotation. These are the conditions that historically precede significant resource sector moves. So here's where we actually are. The Australian silver sector is moving through what might be called stage 2 of a longer cycle. Not the explosive move yet, not the panic buying phase yet, but the phase where conditions are shifting, efficiency is improving, capital is rotating, and awareness is growing. The phase before everyone realizes what's happening. If you found this analysis valuable, if you want to track what's happening with the Australian silver sector, with the Perth Mint expansion, with global silver supply dynamics, drop a comment right now and tell me, are you aware of Australian precious metals opportunities, or was this new information? Comment below. And if you know someone who follows commodity markets or Australian investments, share this with them, because understanding regional supply dynamics before they become global headlines often separates informed investors from reactive investors. Subscribe right now so you don't miss updates on this story as it develops. Because sometimes the most important moves in commodity markets happen quietly in places like Perth before they become obvious to everyone else. I'll see you in the next one.